Hi there, I'm Ben Jones. Welcome back to Dukascopy TV. Alongside us once again in the studio is Jean-Francois Owczarczak, here to give us his latest update. Jean-Francois, thank you very much for joining us again.
Hi Ben, thanks for having me.
Not a problem. Now, we've got the ECB Press Conference later on this week, so should we go straight in and look at the Euro-US dollar?
Sure. Well, we're back on our mosaic, where we do have the Euro-US dollar here. Cable, Australian dollar, gold, dollar Swiss, dollar yen, 3 months S&P futures, and 3 months 30-year T-bond futures. So let's go into the euro. And last week we were signaling that the downtrend was not quite over, but we may see a bounce towards mid the end of the week. That pretty much happened. This is an investor's view, so it combines a weekly chart, a daily chart, and an hourly chart. And it's our longer term view. We also offer a trader's view, a scalper's view, and a super scalper's view, which is a 60 seconds, 15 seconds, 5 seconds live streaming. But let's focus on the investor's view, which gives us a good perspective for the week ahead. So the weekly, as we've been saying over the last few months, has been consolidating up since 2012. It's only a correction for now, as labeled here. We haven't been able to make it above the strong resistance that the machine sees above 140.34 to create an impulsive move. The corrective move seems to have achieved its goals. It's now in the process of rolling over. It would really need to go above 140.34 to create anything more meaningful to the upside. You can see that the risk index, although not quite overbought, was quite high and is also rolling over. Now if you look at the daily, 10 days ago it crossed our corrective targets into impulsive territory, so that is a stronger, more robust move. Now our projections are showing that there's probably a few more months to go, and we could make it down to the 130.56 level, up to 132.63. Now we do see quite an oversold situation on the oscillator. We do have market stress with the two envelopes touching each other. Usually the first point of market stress is only an intermediate bottom. So that is mostly considered as we may see a pause in this downtrend, but the downtrend is still in place. Now to be able to monitor what's happening over the short term, we need to go to our hourly chart. And the hourly chart is made a bottom mid last week. We were in the oversold territory, the oscillator moved up. We had reached the targets, but also here it's only a first impact, first time our smaller envelope touches the larger envelope. So it may not be a durable reversal. So we've seen this more as an intermediate bottom. The correction has been initiated mid last week. It probably has maybe a few more days to go, but it's still a downtrend, and so we would expect that this downtrend is not over. So that's for the euro. Last week we were also having a look at cable. We were saying that it seemed like there were a bit more to go in terms of the hourly chart, and indeed the consolidation here has been very, very shallow. And we're into the objectives, but it's only an initial stress. The oscillator is well in the oversold, but it hasn't turned yet. So we might see a bit of a reaction here, but it's still a downtrend, and we still think it has some time to go. Now, moving on to equities, where we did see an event last week, is that our hourly, which had been having a bull for the last few months, turned into a bear. It was quite a sharp sell-off between Thursday and Friday. It was a very sharp sell-off indeed, because we didn't even pause at our corrective targets. We went straight into an impulsive targets. It seems like at the moment we do have some stress. We are in the oversold situation on the oscillator. And again here, it's only an initial stress. So expect a bounce, but it doesn't seem to be over, and there's more to go, possibly just right below 1900. Now, the long term is still in a bull, quite a tentative bull, because we're looking at E2 targets, which are very aggressive targets. That's our most aggressive level of targets. We've almost reached them. The oscillator is also turning around here. You have a point of stress. You can't really call it a long-term reversal yet, because it's also only an initial point of stress. But it means that it's quite overbought, so it would be a point where you could expect a consolidation. The daily was also quite overbought with the risk index in the red. Targets had been done, and we had market stress, meaning the two envelopes touch each other. Now, I want to zoom out a bit, or take a bit of a perspective and look at a few other equity markets to try to understand what's happening here. And so the US markets had been the more resilient markets. You can see the Nasdaq here, you can see the S&P. Both the impulsive targets had been done, the oscillators are in the red, so it was quite an overbought situation. Now, it's probably interesting to look at the DAX here, because the DAX is having some problems because of what's happening in Russia, or more likely Ukraine and its incidence on trade with Germany. But what is what you could see here is that the weekly was pretty much into its targets and in an overbought territory, and the daily has been correcting down for the better part of about 6 weeks. Now, we're getting quite close to the end of the lower end of these corrective targets at 91.40. If we were going to move below them, that'd be quite a bearish signal, because that means we'd be going impulsive on one of the major European indexes. So expect quite a lot of support here around 9,140, and we would have to anticipate a much stronger consolidation if we were to break through them and move lower. So we're not quite there yet. We can see a bit of work here, and as said, 9,140, quite a strong level of support here. So that's to be watched. And over the short term, it seems like we're slowly getting into exhaustion here. The downtrend is a bit has been going on longer than, for example, on the euro. We did have an intermediate bottom at some stage here, resume a downtrend. We're well in the overbought, we're at stress, but it hasn't really flattened yet. So there's probably a bit more to go to the downside during this week.
Okay.
Maybe we'll finish off just by having a look at other equity markets. So European is slowly getting to a point where it might get dangerous. Well, you see, we're still a bit of ways on the FTSE. Here, if you look, there's a bit more leeway towards 6,500. And interestingly enough, emerging markets haven't been dented that much, but that's mostly a dollar effect, I think. Meaning that the dollar is strengthening, these are exporting markets, and that is helping these equity markets. Quickly finish off on gold, very quickly, back into our Dukascopy directory, and we'll go straight to gold, into here. Well, that was Australian dollar, sorry about that.
Close enough.
So let's go back into here, if it occurs, and into here. And with gold, we had impulsive up targets on the daily with a bull, and we're saying, well, we're not quite sure of that. We think we really need to see more momentum and another leg. And fair enough, the targets have now disappeared, meaning a neutral situation. And the neutral situation, while the weekly is still heading down and the hourly is heading down, is negative at the moment. So not the time to jump on gold.
Fantastic. Jean-Francois, once again, it's a pleasure having you.
Thank you very much.
And thank you for watching. Do make sure you keep on clicking back to Dukascopy TV as we bring you plenty more updates and exclusive interviews. Bye for now.